For today's Wall Street Beat, Bill Ackman pulling the plug on his IPO dream of that closed-end fund after his fundraising targets plummeted in just weeks. Joining us for more is Bloomberg's Bailey Lipschultz, who has been covering this top to bottom. And when I look at the story that was written overnight by Kathy Burton and Annie Massa of Bloomberg, one part stuck out to me, that Seth Klarman was angered that Ackman named him in a letter to big investors about the IPO that was later made public. This letter served as a role in complicating the IPO, didn't it? Is he losing friends over this?
I imagine his inbox is probably pretty filled with messages. I mean, when you look at kind of the pushback that we saw, according to the filing, that letter was never supposed to see the light of day, but he did name drop Seth Klarman's bow post. He did say that they were in for $150 million, name dropping them with Putnam and a teacher's retirement service down in Texas. But it does seem like shortly after that, bow post pulled its commitment, and then obviously things spiraled pretty quickly from there.
Absolutely. And you take a look at the press release that hit the wire yesterday. This question, they say, kept coming up. Would investors be better served waiting to invest in the aftermarket than in the IPO? Because I'm hoping you can translate this. So basically, this is a closed-end fund. Closed-end funds often trade at discounts.
Especially now, and he has an offering already in Europe that trades at a more than 20% discount. So from the start, when I was having conversations with people who actually operate at institutions who they were really trying to sell this to, in addition to the retail investors, why would you pay an equal amount knowing that it's going to trade at a discount when you also can, though the terms are structured differently, just buy already essentially the same asset?
You're going to get it on
20%.
sale in
exactly.
like 2 weeks.
So you need to find someone who's willing to put in billions of dollars, and typically closed-end funds cater to retail investors who maybe want to have someone like a Bill Ackman kind of help manage their retirement, and maybe they're not thinking that far in advance, but the institutions are not.
Part of this play, too, was not just the relationship with institutions, but of course his followers on X.
Yeah.
What does this mean for his relationship to all those followers?
Well, if you think about it, Sonali, 1.3 million followers is a lot for you and me, but it's really a small drop relative to the likes of an Elon Musk or a Donald Trump, who we see rallying millions and millions of followers. And when you do the math and just kind of break down what a $2 billion closed-end fund, which it was targeting at the end, you're still asking for north of about $20,000 a person on X. And a lot of these followers, maybe they're kind of falling for the tweets, or as he kind of framed it, part of his posse. Even if they're putting in $500 million, a lot of these people aren't seemingly going to line up to give 10,000 plus.
Well, apparently, again, according to the statement, they're reevaluating the structure. They're going to report back once they're ready to launch a revised transaction. I'm sure we'll be checking in with you again maybe soon. That, of course, is Bloomberg's Bailey Lipschultz.